Following another attempt to reclaim the $50,000 mark, Bitcoin is down 6.7% to start the week and hovering around the $47,000 mark at the time of writing. In light of the upcoming FOMC meeting, it seems like the retail sentiment towards the top coin is starting to turn south in a hurry. But what could the growing bearish bias mean for Bitcoin's end-of-year potential? In Santiment's weekly pro report, we dive deep into Bitcoin's latest social and on-chain data and what it suggests about the current nature of the crypto market. With Bitcoin's ongoing struggles to breach the $50,000 mark, it seems the retail patience may be starting to wear thin. According to text data collected from over 1,000 crypto-related social media channels, including Telegram, Reddit, Twitter, and more, the average sentiment towards Bitcoin is currently at a 30-day low, pivoting from bullish to predominantly bearish in the span of 1 week. As you can see here, the average Bitcoin bias briefly spiked to positive over the weekend as the top coin managed to hold an established support level. The excitement waned quickly, however, possibly, at least in part, due to the upcoming Federal Open Market Committee meeting scheduled for this Wednesday. Whatever the catalyst, today marks the lowest that Bitcoin sentiment has been since the start of the correction, perhaps signaling a wider shift in retail confidence to the end of the year. Further signs of this may be found in the amount of buy the dip mentions collected by our servers, which soared around the December 4th crash, but have struggled to maintain the same momentum since. Overall, it seems that the crowd may finally be giving in to Bitcoin FUD, which may not be the worst news for the market. Based on several backtests of our social data, it is the overwhelmingly bullish sentiment and high retail confidence that have marked periods of price depreciation for Bitcoin in the past. As we mentioned in last week's report, a sustained drop in Bitcoin-related sentiment may help provide fertile ground for price recovery, especially if other fundamentals remain solid. And it's not just the retail sector that's turning bearish. On several high-volume exchanges, Bitcoin's funding rates have evidently started to slide downward over the past 24 hours. Bitcoin's funding rate is the fee paid by one side of the perpetual contract to the other. When the funding rate is positive, it suggests a net bullish bias among derivative traders, since Bitcoin longs are paying Bitcoin shorts. When it's negative, it signals a much more negative outlook as Bitcoin shorts are paying Bitcoin longs. All that said, the latest drop to negative funding rates is still minimal and has only started to emerge on most exchanges in the past 12 to 24 hours. A more sustained drop-off in the coming days may well be needed before proclaiming a clear bearish consensus among derivative traders. While Bitcoin-related sentiment seems to be tanking, its network-level activity has recorded another strong week. Since the December 4th crash, the amount of addresses sending or receiving Bitcoin has actually been on a steady incline, peaking at 1.11 million last Friday. For context, this is only the 5th day since the May correction that Bitcoin's daily active addresses have managed to break above 1.1 million. And yes, Bitcoin's daily active addresses have deflated in the past 48 hours, but that's an expected weekend dip. The real question is what happens with Bitcoin's network level activity in the days to come. Should Bitcoin's addresses prove to be able to maintain the same upward momentum, especially if its PA remains flat, it could signal a potential bullish divergence and fundamental support for another bounce back. Along the same lines, the amount of unique Bitcoin moving addresses daily has remained relatively unchanged despite a month-long correction, suggesting a lively network and plenty of intraday value transfer despite the tanking market capitalization. As mentioned on our Friday market stream, this is also why Bitcoin's MVT model has been flashing bright green as of late, suggesting potential undervalued conditions based on the dynamic between Bitcoin's market cap and its on-chain circulation. Overall, as the wholesale sentiment starts to turn sour, it is at least hopeful to see Bitcoin's network level metrics hold their ground for the time being. Still, the ongoing decline in whale balance remains a cause for concern, especially in light of the upcoming FOMC meeting. In the days to come, we'd suggest keeping an eye on social sentiment and funding rates in particular. A more sustained decline could suggest a fast-forming bearish consensus, which may provide space for another end-of-year price push. In the days to come, we'd suggest keeping an eye on social sentiment and funding rates in particular. A more sustained decline could suggest a fast-forming bearish consensus, which may provide space for another end-of-year price push. Well, that's all for this edition of the Santiment Pro Weekly Report. Thank you very much for watching. We hope you enjoyed it, and we'll be back again very soon indeed. Until then, goodbye.